everyone, welcome back to our weekly market update video featuring by Market Soul and Rationale. Before starting, please take a quick moment and hit that subscribe button to support us for more content like this. Very busy week ahead in terms of data flow. I will come to economic calendar in a bit, but before getting there, I would like to talk about the way we should evaluate the upcoming economic data within the context of current financial environment. First of all, inflation versus economic growth. You know, that's always the main mentality that we should employ while we are evaluating the data. Is it's first of all, is data is related to inflation or is related to economic growth, economic activity. So economic growth related data have become more important lately because the inflation side still seems to be under control, especially with the help of cheaper oil prices, and due to of tariffs potential impact on the economic growth. Because you might recall from previous videos that tariffs were only expected that in the first phase that they will have impact on the inflation, but also since that extra cost coming from tariff will be carried by all parties of any kind of trades, that would harm the economic activity. That's why eyes turn to economic activity side, markets emphasizing more on the economic activity. So if I tell any growth related data in the economic calendar that I will about to show you, that's it's going bad, that means it's not strong enough. That means it might be supporting point for Fed to cut rates. So 3 to 4 rate cuts, my expectation. Base scenario is 4 rate cuts starting from June for me, with that expectation, and in that scenario, if that's the base case, rate cuts comes that, the possibility of rate cuts increase, that would support assets like equities, crypto, at some level precious metals. It might push a dollar index lower, but there would be definitely different factors playing a role on dollar index. So with having all these mindset, let's switch to economic calendar. Now, as you can see here in this slide, you can understand from here that how busy this week is. First of all, while I'm recording this video in the morning, we received the JOLTs data. It was weak. February number was revised lower, and March a missed expectation. It adds the case for potential Fed rate cut around June 2025. Consumer confidence showed a steep drop in expectations, even though current conditions held up. That shift reflects rising uncertainty, possibly tied to policy outlooks under Trump. Eastern time on Tuesday night, China's April manufacturing PMI will come. It is expected at a 49.8, down from 50.3. If it comes in below 50, it would indicate contraction and could weigh on more global demand and commodity prices. ADP number is important. Slower hiring would be consistent with other labor data that's with the JOLTS data, that will be consistent. A big downside surprise could rattle markets. Also, we're gonna receive Q1 US GDP number. The market expects a small growth between 0.4% and 0.8%, but the Atlanta Fed model sees a contraction around a minus 2.7% if gold imports aren't adjusted, and minus 1.5% if the gold imports adjusted. So these imports were rushed earlier because of Trump's comments, and that's now showing up as a drag on GDP. So a negative number wouldn't be surprising on that side. So if you remember earlier that I was mentioning that we were seeing some signs of economic contraction in a soft data, but with this week, with all these indicative labor like a data like JOLTs or ADP. After that, we're going to receive non-farm payroll numbers. So if we see some signals in that contraction in economic activity also from this hard data, that will be a risky side, that will be risky, and that might push Fed to act faster than expected in cutting rates. Apart from that, Chicago PMI, another like indicative data, is expected to fall to 45 level from 47.6. It's staying in contraction. When these numbers are below 50, that means like it's contraction area. Weak readings here may drag down industrials and add to slowdown concerns. For PCE, inflation is forecasted 2.8 year over year, slightly above the previous number of 2.7%. Still too high for it's not time for like too high to comfort. So a surprise to upside might delay any rate cut hopes. So if we see some extraordinary numbers from any of these data, that's like outlier data might lead the way. But apart from that, my perception is growth related data will be much more in focus. Also, we're going to receive S&P Global Manufacturing PMI, which is like projected to tick up 50.7 from 50.2, and ISM Manufacturing PMI is expected 48, down from 49.4. Another contractionary number from ISM side also signals like continued manufacturing weakness. When we come, the most important data of the week is like on Friday, we're going to see non-farm payroll numbers alongside with like average hourly earnings. Average hourly earnings are expected to rise 3.8% year over year, which is down slightly 3.9%. This is an indicator that if we see slower wage growth, that helps inflation, right? But that will also mean like may cap like a consumer spending. So if we see too much low wages, that will mean depending on the savings, it might impact consumer depending, and thus it might have an impact on economic activity. But the main focus there is like more inflation side, and monthly data will be important on that side. When we come to non-farm payroll, are forecasted 129k, a steep drop from 228k. So we need to also watch, apart from the headline number, we need to watch the revision that will come to the previous data and the like a 3 months average non-farm payroll number. That's a trend that we need to seek, and it's like pretty important in terms of that. Unemployment rate is expected to hold 4.2%, still historically low, but an uptick would increase concern given the other soft data. So overall, the economy looks like it's losing a momentum. Still, hard data didn't support that, didn't like confirm that, but slower job growth, weak manufacturing, and sticky like inflation all raise question about like what's next if we see a sticky inflation. But the main concern is more slower job growth than weak manufacturing. I think that will be the case. And I mean, after whenever we see some tariff deals are coming up, I think the next step we'll see from the Trump's administration is all these like tax cuts, and tax cuts might like give some like room markets to I mean, will provide some liquidity for sure. But yeah, the overall currently the economy is like looks like losing momentum. In that terms, like we have seen some pricing on this theme, that strengthening Japanese yen, strengthening in Swiss franc, which are like risk of currency, and strengthening in gold for sure. So with this mentality, now I want to skip to charts to show you still, I mean, amid all this like concerns, uncertainties going on there, what kind of trade ideas that we can generate. So let me switch to charts. First of all, I want to start with if you want to play the slower economic growth, that would mean less demand for oil, and oil supply issue that I kept mentioning in my videos, that in OPEC plus US, it's pretty important for US to have a steady oil price amid dealing with tariffs, because tariffs have huge inflationary impact and oil price has also. That's why, you know, I mean, now they're taking the risk of tariff side, but they need to like compensate it with oil prices. That's why OPEC Plus is under pressure to adjust supply and to lead to lower oil prices. Apart from that, we had mentioned this weekly descending triangle chart pattern, pulled back, a huge spike, then moved like a pullback here, broken down, pulled back, and now it's resumed its downtrend. I think this is a really good like trade idea. And as you can see, like the here around like a below 60 levels, there's nothing like a huge support around there. That's why I still support this trade idea. That's the one of the best trade idea lately. I mean, it's both like it has both like a technical support and a macro side also. That's why I really like this short trade idea. Gold, yeah, uptrend is like already like obvious. When we come to the 4-hour chart, I would like to show you here, and head and shoulder top chart pattern is formed. This kind of chart pattern might act as continuation or might act as reversal. So if we see a breakdown below like let's say 3,280 levels, that would lead to head and shoulder top chart pattern acting as a reversal to be in action. But if we see a breakout from the like a 3,370 levels around this, that would lead head and shoulder failure chart pattern to be in action. So it's getting like it's consolidating here. And when you go to like a daily chart, as you can see, there's a like, let me open the moving average first of all. Let's say this blue line or like a 21-day moving average is acting as support. As you can see here, pulling back around this 50 to like short-term moving averages, and same happening here. Still like amid the base scenario is rate cuts and amid like a lot of uncertainties around, I prefer to be long in gold as I see more opportunity technically. That's why I'm chasing this 4-hour chart pattern. Generally, as the time frames come down in charts, the reliability on that chart pattern comes down, right? But I mean, we need to get in like maybe some like in this kind of huge uptrends in order to find spot to be long. So it might be useful, and this kind of head and shoulder top failure might be a good action to be long. So you can be long around here with a stop there, or if you want to be like just before getting long here, you can just give make a bet just with a current price and having a stop around like a 2%. That might be a nice good sound trade idea. Yeah, let me switch to dollar index. I'm following this monthly channel to see some rejection from this like a lower boundary of this channel. If we see, I had mentioned that I'm following in order to be long, I will be seeking to be long in USDZAR, and as you can see in the daily, when you go to the weekly, I was expecting to see, let's start with monthly. Monthly, you can call it ascending triangle, bigger like cup with handle. It's major, it's really nice chart. But when you go to the weekly, here also you can see that this potential cup with handle formation. That's why I'm seeking to be long after seeing a consolidation around here, like I don't know where, but around here. If I see a consolidation, I might seek to be long in USDZAR as well. So let's continue with euro dollar. After this huge move, euro dollar in 4-hour chart pattern, I'm following this. I'm following this head and shoulder ish, not the best, but yeah, there's at least like a, let's say you can call it also maybe flag or something, and this might act in like both directions as well. I like personally, to be honest, after these kind of huge move that we had seen in euro, in franc, and in Japanese yen lately, generally it takes some breath at some level, then it continues. If we're gonna see a reversal, I mean, that's for sure on the table, but generally I don't seek to be against in such trend, right? If you come to the daily chart, because this trend is coming from, I don't know, it's here, from here, right? From here. That's why, rather than seeking to be, I don't know, like short here, okay, this trend is going down, sorry, turning back. I mean, this this level might be an opportunity to be long again. Maybe if you want to bet, like, I mean, this is not the best trade idea that I have in this week for sure, but if you want to trade, maybe you can be long around here with a stop here to target 1 to 2.3 risk reward ratio by targeting this let's say prior high level. Yeah, let me continue. Aussie franc. So still the rest of the video I'll show you like a few more charts that those trade ideas will be based on the strength of franc, Japanese yen, and euro. So that will mean after we saw this huge move in all these, for example, in this Aussie franc, as you can see, when I say that recent move, I'm sorry, I'm mentioning this move. Okay, after this, I would generally seek to be like a trend follower, as a trend follower, to be short again on this, right? So when you come to the 4-hour chart, as you can see, after this huge move, we saw a rejection from here. Then it's like in the 4-hour chart pattern, you can call it like a consolidation, or you can call it like head and shoulder top, and like this, right? A potential breakdown from here might be a good opportunity to be to bet on the main trend, right? So let's say short opportunity. Just if you can be short from here by putting a stop loss around here, and if you target 1 to 2, for example, it's not somewhere really far away. When you go to the daily, for example, I mean, this level is pretty, like, I mean, generally V-shaped reversal are not that common. I mean, it happens for sure, but what we see in generally is, let me show you like this quickly. If we see such move, it goes like this. If it's gonna reverse up, first do this, then do this, and it would lead to form a consolidation here in higher time frames like daily, weekly. Then we see a reversal. That's the reliable one. That's why what I'm trying to say is trade ideas that I will be showing will be more franc positive, Japanese yen positive, or euro positive. I mean, it doesn't mean that I mean, that's like, certainly I think that these will appreciate, but I don't want to seek any trade ideas that contradicts with this idea. That's what I'm trying to say. So quickly, let me skip to Euro Aussie. Again, when you come to the 4-hour chart, again, I don't want to be short on this one. That's why, like, after this uptrend, pulled back, a consolidation as a trend, like the main trend is euro long. That's why I might seek, for example, when you come to the 1-hour chart pattern, first touch, second here, and we might see a breakout from here. And when you come to the 4-hour again, you can generate this trade idea from 4-hour chart. Sorry. Yeah, you can be long around here with a stop just below this bar. That's really sound trade idea. Apart from that, pound franc, to be short in, sorry, to be long in franc, I was seeking for some pound short opportunity, and as you can see here, sorry, after this breakdown, it pulled back, and this pullback saw a rejection at this level of 1.11 level, which was old support and current resistance. That's why if you want to be short around here from the current price, and you can put this highs as a stop, and you can take a bet on franc by being short in pound. Same here, as you can see, this is a really nice in the daily chart, descending triangle chart pattern, broken down, pulled back, and just check where it got where it saw a resistance, old support and current resistance price. It got rejected from here, and if you want to be again like a short here, to be like a pro franc, Swiss franc, you can be long with a stop here by targeting these levels. And I think this was the last one, OC yen in the 4-hour chart. Yeah, and as you can see here, after this, let me show you this again, and oops, after this breakdown, pulled back, and if you want to be short again, same with New Zealand dollar and yen. That might be a nice sound trade idea. So yeah, that's all I'm gonna talk about this week. So just to wrap up, the general conditions, still uncertainty goes on. That's why like oil prices are under pressure, plus oil prices are under pressure from like a supply issues as well, pressure from I mean like OPEC plus uncertainties. That's why I think being short in oil, the soundest, the most sensible trade idea currently. But yeah, in general, as the uncertainty goes on, like being against like Japanese yen while they're hiking, and being against Swiss franc, or being against gold is not that easy if you don't want to be, if you're just like a trend follower trader. But apart from that, we need to watch in the data flow. This week is pretty busy, and we need to watch all like economic growth related data in order to see some signals that will say, okay, Fed's gonna cut rates faster than expected. Still the base scenario for rate cuts starting from June 2025. Thank you for your time. If you like whatever you see here, please like, share with your friends, or if you have any question, please just write down below the video. You can find the link to subscribe to Rationale newsletter service just below the video in order to receive this kind of trade ideas right into your inbox. And also you can find MarketSol website link in order to check as a brokerage firm. So I wish you a really nice week, and I wish you a really good luck. Have a good one. Bye.